regarding the distressed deals, actually, in France, we speak about that for more than 4 years. And every year, at the beginning of the year, everybody says this will be the distress year. But actually, 2008, 2009, 2012, 10, 12, 11, and 12, we don't see so many distressed deals. As I said previously, when there is some distressed asset on the market, sometimes the vendors, they prefer to sell another thing because they can refinance the other. But really, there are some distressed deals, sure. But it's not the, I mean, that's not the main market. I mean, for example, there is a very good developer in France called Christopher Holloway, very, very good developer with a very long track record, perfect, very, very good job, and he upgraded the building in France actually, and he built a 10,000 square meter building in La Défense, and today's in the newspaper, everybody say this is for sale, there is no tenant for 3 years for that building, and surely it will be a distressed deals, but I'm not sure that it will be so distressed price. I don't know what your opinion, Philippe.
No, it is my opinion, effectively, and you're right on this point. And but everything is not on the table sometimes. It's all is under the table. So there is a lot, not so many, but there is some transactions which are under the table.
I wouldn't qualify distressed deals. I would qualify that as opportunistic deals that might turn to be distressed business.
Okay.
Which is, and I'm referring to what Olivier mentioned in his presentation about this Jessina deal that was sold to Carvel last year. This was clearly not a distressed deal in the sense that Jessina was not distressed, but at that time, clearly their strategy was, and it's still, not to stay in the industrial business. So they were really selling portfolio. There's actually another one in market right now that's going to close, certainly perhaps tomorrow actually. But the pricing was distressed on this one. Clearly, why? Because there was a 20% vacancy in the portfolio, and I guess Carval is a very opportunistic player. So made a good deal in terms of pricing, but now they are actually carrying the vacancies. So with difficult buildings to lease. So yeah, that's the kind of stuff we can see. Perhaps there's a couple of, I would say, example, but I would not again qualify that as distress, but rather opportunistic. I mean, players that want to sell, they are not necessarily in distress, but the market's not very liquid, secondary location, unit by unit. So you would certainly see, decreased pricing to the extent that what's absolutely not expected even a year or 2 years ago. But that's very limited. So I tend to agree with Olivier's comments generally. I think there's clearly an opportunity here as long as you are buying the right vacant buildings. And I think clearly it's, there's vacant building and vacant building. So like good asset and good asset. So yes, I mean it's clearly a good opportunity to create value in the midterm, and I think it's a good bet because like I said, I mean the market is healthy, so it might take a bit longer than expected to lease the space. So you've got to underwrite that properly. But I think in the medium to long term, it's going to be a terrific investment.
Okay.
Just
John,
one thing, Nama, which is obviously the Irish bank that took on a lot of the distressed assets. And in Paris and London, across Europe, of course, quite a lot of the highest priced assets were paid by Irish buyers in the 2005, 6, 7 level. I'm not sure if these figures are absolutely accurate, but I'll try and remember them. The size of Nama as a distressed bank, or a bank that has to work through assets, is about 74 billion euros. And of that, the proportion of that 74 billion that is income producing is around 33%. So about a third of that portfolio is income producing, and if I'm correct, the proportion of that where the income covers the interest is about 20%. So in the context of Nama, where you look at a distressed portfolio, the biggest in Europe, I would imagine. When you look at how you can actually unlock it and actually work it through, it's quite a frightening statistic with regard to how viable a lot of those assets are. And what we're finding across Europe is that consensual sales are obviously easier than a distressed sale. Because if you do the distressed sale, then the original equity partner or the original client will argue that it was sold in the wrong way for too low a price, and you get into problems. So what we're finding, particularly acting for the Lone Stars and the Blackstones and Cerebuses of this world, is that certainly there are funds raised, money raised to buy across Europe, into Paris, into France, on distressed assets. It's quite a competitive market. It's quite a complicated, difficult market to get right. But at the same time, I think over the next few years, as Olivier said, it's taking time, but there will be a transfer to some of these funds. Just on that point with regard to Blackstone, as many of you know, have just bought this estate here. That was not a distressed sale, by the way, I emphasise, but they've bought the Devonshire Square estate, and they will put capital expenditure into improving it, transforming it. And I think it was about £340 million, the transaction. The point I'm making is I think that some of the buyers going forward in the next few years in Paris and in London, the larger schemes which need money invested in them, will be some of these larger private equity funds that not only can buy the asset, but they have the money available immediately to then invest in repositioning those assets, so that they will put money into the speculative building, etc., to make those assets more attractive by being brave and investing in those assets. And I think that's a trend that we're seeing in London. I think will happen in Paris as well.